the metals and miners, the biggest bull market that we've ever seen is coming next. These things are very cyclical, and if you can buy them, when people are hating them, you can make a tremendous return. Bitcoin and gold will take X amount of market share from fiat, and together, because of the size of gold, which is still a big monster compared to Bitcoin, together right now, that actually makes even a bigger impact. So we should be embracing gold. The toughest thing to figure out is when and how to sell something. The question is, do you end up being early, or are you, part of the sheep that end up getting sucked in anyways?
There's a lot of skepticism today towards the junior mining sector. Sentiment has rarely been this bad. But is that a contrarian indicator? Eric Mujinski of Phenom Ventures thinks so. Over the next few weeks, I'll be chatting to him about investing in these markets and how to navigate the volatility that comes with many of these small cap stocks. We'll also look at how Eric includes crypto as a complementary asset and how he's learned to deal with the asymmetric risks that they bring. So please join me as I learn about how to invest in the minefield. Eric Mujinski, great to see you.
Thanks, Roger. I appreciate it. Really looking forward to it.
And I think, over the next few weeks and few months, we're going to be on this journey, which hopefully a lot of people will follow us, particularly you on, which is effectively how to invest in the minefield. And I think we've chosen this phrase minefield to be very generalist. You're going to have your bias, which is towards commodities and mining stocks, but we're going to be looking at quite a lot of the market, quite a lot of the investment framework.
Absolutely. I love the idea and the framework, because it just so happens that, I'm one that, I like to invest in high risk, high reward, asymmetric return type of areas. My background in everything from traditional venture capital with technology, still an active angel investor, lost all my money plenty of times, had my hits to make it all worthwhile. And also the areas that I happen to focus on the most in the last, let's call it decade, or more, has been the mining area in mining equities, which is, it's very cyclical. And unless you believe that the Fed taking rates to zero squash all cyclicality in commodities and metals prices, there's a massive opportunity there. And I think that the timing, and I commend, Real Vision as well, on even wanting to discuss this hated sector where people just do not give it the time of day. I see massive, massive upside and opportunity. And, the other area I've been very focused on started in 2016 when Bitcoin was under 500. And that is a very volatile space as well, obviously. And it's sort of ahead of, I think, the mining and the metals plays by, maybe 6 to 12 months. Maybe a little longer, we'll see, but that's been paying off for a lot of us recently. So this is going to be a fun area, and the minefield can essentially relate to just getting blown up because we're dealing with some high pain type of stuff.
I mean, that's the thing, isn't it? I mean, it's the minefield because it's the field of the mining sectors, etc. But it is the minefield of investing. I think there's two things, which I was particularly interested in that you were saying there. One of the reasons why we wanted to do this with you is firstly, you're talking about these volatile asymmetric risks. And I think the important thing here is for people to understand that these things have a place in a traditional portfolio, and it's not, everybody wants that home run. They want that one trade that's going to be the retirement trade, which is not realistic. But can you explain maybe why you probably focus on these maybe a bit more than most, because you see these as being a bit of a safety net over the medium to longer term in terms of the way you think about these things?
A safety net, to me, is physical gold. That is to me the safest place for my money to maintain its store of value and purchasing power over time. That's my defense, physical gold. On the offensive side, I had looked just the trajectory naturally after I stumbled onto gold as an alternative investment. When I was an alternative investment advisor in the early 2000s, I started being intrigued by the higher risk reward of finding, an economic gold deposit. And then, that maneuvered into silver, which is, they call gold's cousin. And then you've got now, which for a long period of time, I was not interested in general commodities. But I think there's actually an apex that's ahead of us for, this electrification, trend that is a once in a lifetime conversion from fossil fuels over to the battery metals that are going to end up powering everything from electric vehicles to, battery related industrial metals for things like vanadium. These are very intriguing areas because nobody's been paying attention to them. They all looked at this trajectory of 24 to 2027, and sort of this apex of you've got the demand side, even just of EVs, which has actually followed through with a lot of these projections and done even better. And then you have this falling commodities area, which has been neglected. And there's just not going to be any materials for this stuff pretty soon. So what has to happen there? There has to be a rise in prices to incentivize people, just like we've seen with lithium. And I don't know about, I think about the word, the safe haven or the defensive area with these type of things. I'm more offensive. I mean, I'm probably what you would call a little bit crazy because 45% of my personal net worth is invested in mining companies and metals and also just, physical gold. But, that does go the spectrum in terms of some of the bigger ones, but I don't get into really the blue chips. I want, the real, gains or losses. I'll deal with those over time and go down into even, like I call it, the ghetto, the back alley with some of the really tiny market caps where I think you see the extreme of where this space has been beaten up. And then I've got, over 40% of my net worth is in crypto. These things are very cyclical. And if you can buy them, when people are hating them or they're down quite a bit or there just is a lot of apathy, in my experience and opinion, you can make a tremendous return.
And so I guess that really brings on to the sort of the question, which a lot of people are probably wondering, which is, and you sort of slightly answered it there, but why now? Why are we doing this series now? Why do you want to get out there now? Because it's been one of those, a bit like uranium was for a long time. This is a story which people have been talking about for a long time now, and we're still waiting for Godot. Yes, we're still there. Why now are we doing this series? Why were you excited to get out there and start talking about these stocks which have been beaten up for a long time? And if anyone looks at a chart of gold and silver versus gold miners, the gold and silver chart's probably okay, particularly gold, but the miners, the junior miners, they look atrocious. So why now? Why do you want to start this story and this journey today?
That's exactly the greatest point. I was just looking before we began to chat at the price of, because the junior miners and the mining companies, this does go for the, there's the GDXJ, which is an ETF that is supposed to be the juniors, but they don't even include any market caps below $1 billion. So to me, they're more like mid caps in general. I mean, the juniors can go down to $5 million market caps. So a lot of people here don't want to mess with, but it does give an indication because a lot of those are down 80 or 90% in the last, call it 3.5 years. It's really since the tops that happened in gold and in the miners in like August, early September of 2020. So we're getting into the, into close to the 3.5 year mark that's coming up on this. And so when you've got the GDXJ, which is down over 50, almost 50% as of today from those closing numbers in August of 2020, and the price of gold is down 2%. So there's a big disconnect in how much those things have been liquidated versus the fact that, the ones that are in there are either they own or sitting on massive, assets in the ground of gold, and or many of those companies, most of them actually are producing gold. So it's going to directly impact their bottom line. The fact is that I look at this sector like it's trading like gold is at 1,1500. And the only other time that I've really felt this way and seen this to any, relative degree was in 2015. I launched the gold investment letter in the fall of 2011. It was at the peak of the mining frenzies, which also went into like rare earth metals and all kinds of things. And it was the peak in the gold and silver prices as well. So from there, I took a 4-year journey down a very difficult trend, a very brutal bear market that, by the time we were looking around in the summer of 2015, there were companies I could not believe what I was seeing. I mean, there was like, one particular company that they had cash, they had a royalty payment that was going to keep them solvent for 5 years. They had assets, they were earlier stage, but they were in Sweden and their market cap was 400,000 Canadian, 400 grand. You could buy it at a half a penny to a penny. And that stock ended up going to, 40 cents. And if you were involved in the one financing, that we did, it had warrants at a nickel and got the stock at 3. I mean, the returns, even though you can't, put to work $5 or $10 million in something like that, it's just too small. But when you have those type of returns, it's not bad. You don't need a lot of money in those plays, which is probably not even that appropriate anyways, to have something that puts a real dent in your portfolio returns. And that's what I'm seeing and feeling again right now, although now it's more of a broad scale, just complete decimation in the sector. I mean, there are companies that, our group is going to be financing and going into a placement. On one of them, it's got, 1.7 million ounces of gold in the 43-101 category. It's an earlier category, but they've got the gold there. It's at a gram per ton. So it's a good grade. It's in Canada. It's not in, Uganda or something. And it is trading for the equivalent of $2.50 US per ounce of gold in the ground right now. So last I checked, gold's over $1,900 an ounce. That's just too big of a disconnect. So I'm really motivated right now to get the story out instead of when this stuff gets hot again, which it will. I'm telling you, it will. It just will. The question of exactly when, we still will see that if it happens during this next 6 months. But, now is the time to be looking at it.
Yeah. But I mean, the skeptics will basically say, oh, we've been waiting, we could die wondering on this one. It's going to take so long. Because, some people say, well, I could just have put my money in tech stocks and made my millions by now. But so what is it? Because you touched on something there, which even I've seen, having worked at Real Vision. 5 years ago, if I made a film about miners, there was, in the comment section, there's lots of people going cheering it and high-fiving it and agreeing. Nowadays, probably in the last 24 months, almost every film that I've made on miners, the comment section has been really negative. Everyone's gone, yes, we've heard this before. Yes, commodity stocks or commodities may be rising, but the commodity stocks, particularly these small ones, they destroy capital. And you're never going to get your money back because these managers kill it. But you feel, firstly, differently, but also secondly, part of this journey that we're going to be going on over the next 6 months is to try and weed out those which are going to do well in the environment where we expect eventually the gold will pick up and break. We're very close to those all-time highs. So what do you say to those skeptics, me included, who go, yeah, but there's just so many other things I could have done instead?
Yeah, certainly. Well, we're not talking about what you could have done 2 or 3 years ago. We're talking about now going forward. And, the word pleb, the word cheap, those type of things come to mind in the sense that, people pile on when things are way down and you're going to get your online haters. That's actually a good sign. I have a contrary indicator with my newsletter, which has got over 50,000 subscribers, that basically when I get the calls that I'm an asshole, that I'm a dipshit, a scumbag, and those increase to a certain poignant level, or just fear, fear of like people that are on board and they believe in what we're doing, but they're just about done because they've had it. They've watching these unrealized losses go pile up. Am I going to lose everything? I love to see that capitulation, and we've seen a good amount of that. So, I like to bring things to the attention, and I'm sure you guys do as well, of people when there's value there. And that's where, with the junior miners and or with the certain crypto tokens, I would ask those people in the comment box, if they have, great, I wish them well. But how many of them have made 10, 30, 50, 100, 500 times your money in these speculations? If you haven't, then, you might be able to actually get something out of this, because we have. And we've done it multiple times in crypto and in the junior miners, over 100x in 2 of our top picks that have happened, back since the letter was started. The 3 to 5 to 10x, those are a lot more common in the smaller ones. To get that big of a hit, you've got to find usually a discovery. But let me just say this. One of the real reasons, too, with the skepticism is that I think you have to look at things, and we're going to get more and more attention on what is a real return and what is a nominal return. And that's what brings me to the table with gold as money, as a metric of money. Also Bitcoin. They call Bitcoin a store of value because they don't understand what it is. It is not a store of value. I'm not in Bitcoin for 10% a year. Ask any of the major institutional investors that have been early. We're in it to get rich. It's either going to work as a network effect and go much, much higher with venture capital like returns, or it could go to zero. We know that, that's what the case is. Later, it may be a better form of digital gold and be a store of value, but that would be when, in my opinion, Bitcoin is in the millions and the volatility is evened out and the opportunities to take advantage of that opportunity would have evened out as well. But if you look at the S&P, I was just looking at a 10-year chart, and you look at it in fiat, in US dollars, that thing looks about as juicy as you can get. I mean, it is a perfect chart over 10 years where the S&P has gone up 3.5 times approximately priced in US dollars. But then you bring it in and you price it in real money, which is gold, and all of a sudden you're up about 90%. So still pretty good over the course of a decade, but certainly nowhere near 3.5x price in the fiat currency. And that's the strongest fiat currency that we've had in the world. If you're investing in others, you have to keep that in mind. But also Bitcoin, if you price the S&P performance over the last decade in Bitcoin, the S&P is down over 97%. How many people look at that? That's very important. You have to look at the reality versus just, I'm up 6%, 8% in my 401k or my IRA or my fund this year. That's terrific. Well, what was the inflation rate? How much did you lose and debase in your actual currency? At the same time, you're lucky if you're breaking even. So we need to address these things, and I think this is going to come more into the foray as we see more competition for what are people looking at as money. We're now even seeing BlackRock come into the cryptocurrencies in a big way and Larry Fink even said, this is going to be a flight to quality is what Bitcoin is. So it's pretty interesting how things can change.
And is that how you came to this? Because, a lot of people, myself, being a bit of an old fuddy-duddy, I sort of don't really look at the crypto space. But then in reality, normally you get your gold tribe and you get your Bitcoin tribe or your crypto tribe. And even within crypto, you have your sort of various tribes there. And then you get your silver tribe. And they all seem to battle against each other. But you actually look at these all being very much complementary. And it goes down to that view, which is that this is your hedge against fiat currency debasement. And also, I think you're a volatility junkie as well, aren't you? You like that asymmetric risk. Is that where you're coming at these and why you bunch them together? Your gold miners, those nitroglycerine versions of the play, and your kind of crypto space. Is it this fiat play? It's an embracing of volatility, and it's also, you feel comfortable with those sorts of asymmetric volatile risk, which is what we'll be talking about over the next few weeks.
Yeah, I am really comfortable with that. I mean, I've told a couple of friends over time. I remember the statement came out like, I swim in risk every day. It's just it's okay. I'm comfortable with the volatility, but it feels a lot better when the volatility is going up than down. So I mean, the alpha is what I'm interested in, but also putting these things into the correct pockets of risk. That is why when I look at money, and I look at gold, physical gold or exposure to physical gold as that safety net. Since Bretton Woods, since this thing came off of the dollar backing in the early 1970s, so a little over 50 years, gold is up 50-fold in the price of US dollars. It's about between 9.5% and 10% per year, depending on if you're pricing it at 1900 or 2000. But that is a store of value. And then you've got, on the Bitcoin side, you have something that is, it's a very new thing, but it was actually modeled after gold. I talk from both sides of my mouth because I want them both to do well, but the Bitcoin that I own is still a high risk asset. It's a very volatile asset. It's a very young asset. The returns that I'm looking for there are still venture capital like. Otherwise, I wouldn't endure these. What did we see from 66, 67,000 down to 16? That's a pretty darn big drawdown. Gold did not have that, and it should not have that, and it will probably not have that type of a drawdown in the future because it is a store of value. And what I think that the gold bugs, I'm not a gold bug either. I'm a gold bull. I'm not a bug. Those guys, I have them on my list when I started talking about Bitcoin. They're like, screw you, and they left. And then I have the Bitcoin people that are thinking that gold is a barbaric relic. And I'm like, why would you buy something and put your life into something that was modeled after another thing that you're poo-pooing, which Bitcoin was modeled after by Satoshi. But, I look at this hatred between the two and I say to myself, gold is the safest place for my funds, that store of value, that consistency, that defense. And then Bitcoin is under the same circumstances and same philosophy, that you're going to have a debasement of fiat currencies around the world that's going to accelerate. And even in the US dollar terms, we don't ever think that this is not going to be the world's reserve currency. We think that it's always going to last. It's not. We've seen in history, fiat currencies eventually go to zero. They all do. And that's going to happen here too. So if you don't think that's going to be the case and you're looking out over the next year or two, you could argue we're going to have a strong dollar like we've had, recently. The fact that gold is held up and now Bitcoin is starting to hum should tell you something in those regards. Because what happens when we do see the weakness in the US dollar and in fiat and those pricing, which is an inverse mirror of that currency, not necessarily the stock market, those things are going to absolutely fly. So I say to myself, heavy Bitcoin, heavy risk early in a crypto summer, like a crypto spring, like I think we're in right now. And then there's a time when when Bitcoin is going to go up so high that you're going to want to switch over into the steadier store of value. I'm not going to put it all into stable coins backed by a fiat dollar. It's still a dollar. A dollar's a dollar no matter what kind of makeup you put on a pig or lipstick on a pig, right? It's the same case. So I'm going to go ahead and move more of that into gold then. Gold I have there for my defense, my store of value, my cash, to continue to be able to have that purchasing power. That's all it's for. It's not for competing with Bitcoin. They work together. And what we should be saying, last thing I'll say, is that Bitcoin and gold will take X amount of market share from fiat. And together, because of the size of gold, which is still a big monster compared to Bitcoin, together right now, that actually makes even a bigger impact. So we should be embracing gold.
I just going to say, we don't want to alienate any of the tribes. In fact, we want to embrace all the tribes, the gold bugs, the Bitcoiners, the cryptoers. We'll have them all, because ultimately, we're going to be looking at, how you looked at this space and how you will trade that volatility, or how you trade those asymmetric risks over the coming weeks and months. But going back, and I think one thing which, is kind of key to all this, you just mentioned it there, which is, it feels like, we touch on this and we'll go into more of this in future episodes, but it feels like we're going into the sort of environment where, it should be a real tailwind for, let's just say, gold. Let's just talk about that one first, because the one thing that's kind of obvious is, as you said, gold near the all-time high, just shy of $2,000, has done remarkably well considering where we have seen yields going. So if we do get an ongoing pullback in yields, particularly in real yields, if we do get a turnaround in the dollar, you're going to take out those highs, aren't you? Potentially, say caveat, potentially 2050, 2075. What sort of thing are you looking at? And do you think that if we have been in a sort of a winter environment for these, well, not so much the commodity, but the underlying stocks, if we've been in a sort of winterish type environment, do you feel we're going to go through spring and summer in the near term, as in the next 12 to 24 months?
Well, even a skeptic like you, it sounded like you believe that's going to happen, Roger. That gold's eventually, right, going to end up going through there. And that's if and when we do see that decline in real rates. I think that it's very reasonable to say within 12 to 24 months that we're going to see gold break its previous highs. It's going to have the fourth run at, I consider it 2,100. I think it's got to get through 2,100 to really show a breakout with, strong value. When that happens, you could, if you're a real trader, or just a market speculator or a professional investor or whatever, you will know that that's a breakout that is very substantial, right? So that is significant. And typically, you're not going to see less than a move up to the high 2000s, if that's the case, after literally such a long period of consolidation. You want to buy that breakout as well and really beef up. That you could wait actually for that to happen if you really want to be conservative in terms of even looking at the miners, knowing that gold's going to start helping to print much bigger profits for the producing companies that are then going to be gobbling up and use the junior miners as their proxy, an outsourced proxy to find the next new mines, the next deposits that are going to be economic that they can build. That's kind of how that industry works. And with their flush with cash, they're going to be paying bigger premiums for the smaller ones. And that action should trickle down, and start to see that market be forced to move because earnings are starting to really shoot up. I find that even with the place that it is right now, where it just stayed underneath the all-time highs and doesn't go too low, like say, for example, if it stays above 1,800, there are such good values to see in the mining equities with that leverage. But because it's been frustrated. And I think that the rise in rates and keeping rates higher to try to buck inflation by the Fed has actually hurt the equities in the mining space much more than it has the metals. The way that I gauge this too, Roger, is to get a real feel for the market. Even though people that are watching this may not want to go down to that really low market cap area, sub $20 million or something US, it's very, very small. But when you're looking at those companies trading as if nickel is at $4 or trading where they were trading when nickel was at $4 or $5, nickel's still almost $8 a pound and just was at 12. Copper, is not in a bad price range either for what you're seeing the valuations on the equities. So we have a disconnect without these metals even needing to break into new highs. I like that. I like taking steady accumulative positions in those companies because after 3.5 years in this bear cycle, in my experience, I have never gone through more than about a 4-year bear cycle. And if we look at 2011 to 15, which was pretty extreme because that was coming off of all-time highs, what ended up happening there? You didn't get a warning. It's like a tsunami. I mean, you didn't get a warning in January of 2016. I believe it was the third week. Money started flowing into gold, but the miners specifically, the GXJ tripled in 7 months. I had some of the smaller junior market cap companies that went up over 10x in 7 months. So, it's not about timing the market. It's just about being early, being ready, and putting a reasonable amount of I'd like to call it a meaningful amount. When something is really gut level conviction, you want a meaningful amount in those asset classes. So that is really kind of where I stand in terms of outperformance. I'm doing it in a way where I'm mitigating, not even thinking about gold being at 3,000. I'm not projecting that, even though I think that's inevitable, just based on the track record of gold going up 9-10% a year. It's just a question of timing. But I'm not even banking on that for some of these stocks that we're finding to be of great value.
And I think that's why, we decided we're not going to talk. It's not timing the market, it's navigating the market. It's just basically finding a pathway through all these minefields that are out there to be able to build a strong, sensible portfolio, a good way to play this. Because I think, what we're going to be doing over the next few weeks and months is we're going to be looking at the markets every other week. We're going to be looking at how to invest in silver miners, vanadium. But also, and I think this is a key element as well, as you're hoping to bring on some of the people in this space and interview them, because what I think is key for everyone to understand is it's not just Agmazinski talking about his own view. You've got connections, you talk to a lot of people who run various mining companies, and hopefully we're going to talk to some of them because these are people who've been through these cycles, have been through the stresses, have stuck with it, and are still with it, and are still thinking about exactly as you are.
Yeah, I'm really pumped about that part. We're going to ease in with some interviews of people. These are people that are older than I am. They've been through more cycles and, they've seen it all. And we're going to have a chat, which I think will be a unique chat, the way that I can kind of dig in to the way that these guys, and part of what I think the value is going to be with what we discuss is really the psychology and the thought process of how to be successful investing in volatile asset classes. These are names that some people will definitely know. Others, they may not, but these are like the smartest guys in the business. And I'm pretty sure that mostly all of them have made their hundreds of millions or billions already, and they've done it in this space. So that's what we're looking to do. I'm looking to learn as well.
And when we look at the sort of the overall space you're talking about, I think the other element that we're going to touch on is not just how to invest in, let's say, a sector or a commodity, but also you've had your ups and downs in this market. You've had your successes from being long the volatile stuff, and you've also had the difficulties. And you've come up with some of your own strategies and your own methodologies for dealing with this, the nitroglycerine sectors that we're talking about. So we're going to be looking at that over the coming months as well, aren't we? Where it's kind of your learnings from this environment, which, if done badly, can hand your ass to you on a plate. But if done well, it can give you a very, very good kind of booster to a portfolio.
Yeah, and just being able to stick through bad times if you're going to see it through, or when to cut bait. ease back on things. But I've always said, and I think that usually when I bring this up, most investing professionals agree with me. The toughest thing to figure out is when and how to sell something. That is the toughest part.
And we're going to be looking, or you're going to be looking at, you're probably going to name some names, maybe not recommendations, but things that you are looking at and excited by. But we're by no means recommending here putting all eggs in one basket. What you're looking at here is things that you think are going to be interesting opportunities. And as you say, it's picking the right amount for each individual's risk appetite, looking at a roadmap, looking at an investing roadmap, hopefully looking at some inflection points, some of the ones that might be the slow burners, but with the most upside, and also ways to think about and understand this, how to sit there and maybe be long some very, very small cap nitroglycerine names that might take a few months to get going.
Yeah, we'll put disclaimers on anything. I like to talk about things that I own, that I've got skin in the game in. So, you could look at that like there's a potential benefit to me, but I don't want to just throw things out there that are case studies that I don't also have risk in the game. And frankly, there's a number of these smaller mining companies where if I look at my various accounts, I'm down 25, 35, some cases 45% unrealized losses. Doesn't faze me. I'm still buying more, chipping away at those positions. But, I'll let people know exactly, what my position is, and they can determine if they want to play. And in a lot of those cases, you could do it cheaper than I own them, because I have been a little bit early. I think that that's another thing, and the reason for coming in now and really focusing here, because I like to be early. You have to be early to get the big gains, but being too early can end up causing you to go through some of these downdrafts, that are pretty severe. And I feel like most of that is done. And especially going into year-end tax loss selling and things where people do have gains in other asset classes, you could probably pick off over the course of the next, 4 weeks, some of these things that are just absolute bargains. And the seasonality of gold and the mining stocks I pay a lot of attention to. And we're coming into what is the best part of the season, which is January. Many times we've added, plays that we don't even go into for the very long term, or we take a big position, around now to mid-December if it's a bad market. And then on the bounce just after, January starts, and people come back into what they sold instead of doing wash sales, they book their losses, they come back into those. And that's been very profitable for us, where you can flip out of some of that and then hold the rest for the big nitroglycerin pop, But and also the last thing I would say on that, with some of the smaller ideas, it's just where the biggest values are sticking out. And you don't really have to put a lot of money to make it turn into a lot of money. It's like the biggest order I ever had was in crypto in 2021. It was called Bakery Swap Token, Bake, that I bought in 2020. Later in 2020, it was at a penny 1.2 pennies. I bought like 550,000. So, it was like $7,000 or something that most people watching could do if they wanted to. And I booked at its peak, the highest that I had booked profits, and I sold it in pieces. I say partial return because I sold some on the way up, but $7.77, which is a 650x return. So, even if you have just like a few, $7,000 is something like that, which, a lot of people here, you need to put a lot more work to make a dent. But hey, that's $10,000. If 650x happened, that's $10,000 turning into 6.5 million, which last I checked is a lot of money for anybody.
Well, I'm looking forward to being pulled along in this journey, probably kicking and streaming at the beginning, but hopefully with full enjoyment towards the end. Because I think next up we'll be looking at a sort of market deep dive, and I think the aim is to have a kind of look at what's going on in the market, and then following on from that, we'll have a deep dive onto a specific sector, etc., and then interspersed hopefully with those interviews, so that over this journey we'll look at different facets, different market timing tools, different market factors that are driving the story, the narrative. In fact, we're going to be looking at this narrative unfold, plus looking at all these different sectors, whether it be rare earths, whether it be silver, whether it be copper, whether it be gold, whether it be the junior miners. That's going to be this journey over the next few months, and hopefully you're going to educate me, and I'm looking forward to it. I think it should be a fascinating few months where hopefully we're going to get some of these big catalysts kicking in that's going to really stir things up.
Well, look, Roger, at the end of this, or even in the middle, if we get you knee deep in penny stocks by the time you're, done in junior minors, I mean, some of them are, but we're not going to be bringing up a lot of those. But the joke is, if you've converted and you believe, some of the values here, then we've done a good job. I'm going to just do my best to make it worth people's time, which is so important and so scarce these days. And, I'm sure you will as well. And we'll steer it so that, we can have actionable things that are thrown out there that if people take that action, if I'm even halfway right, they'll end up, it'll be worthwhile. And, then some wealth creation can occur. If we're wrong, then, oh, well, this is a high risk reward area, and people will determine based on the facts and based on the presentation. If the thing gets really, really into a bull cycle that starts to rip, it'll become in vogue. The question is, do you end up being early to that and you're selling them when you're mentioning the stocks you bought earlier at the cocktail parties, or are you, part of the sheep that end up getting sucked in anyways? Because there's just, I think, actually with the metals and miners, the biggest bull market that we've ever seen is coming next.
Be skeptical, but be early.
Yeah, sounds good, Roger. Thank you.
Right. Looking forward to the series, and I'll catch you next week.